Let's take it over to day trader Mike Shorr of Prosper Trading Academy. You have an uranium trade to tell us about, Mike. What's that stock pick?
Yeah, so I'm looking at Calco, CCJ. Like you said, it's a uranium company. And uranium obviously has a lot of industrial uses. But I look at this as almost like a sneaky AI play, because we know that the technology is there and it's just a matter of being able to scale it up. And so we've seen companies, just one, for example, Google, that is turning to nuclear power to power all this AI that, you know how powerful it is. That also takes a lot of electricity to power those things. And CCJ is one of these companies. They're Canada based. And so, a friendly nation as far as trade goes. You don't have to worry about, shipping it overseas or anything like that. So I look at it kind of like a catch-all AI play, but from the industrial side, not from the innovation side. So what I'm looking for is a pullback to 53.5. And if we get there, that's the 20-day moving average. Earnings aren't for a little while. And I think that we have a run at least to 58, if not 60 or higher.
Mike, as a professional trader, without getting political, what's your take on the amazing surge in Trump media shares, DJT?
Exactly. I'm glad that you brought that up. Let's just leave politics out of this and let's look at this as a stock. So, clearly it's bullish. It got down, in the 12s, 1175, I think, was the low. And now, on Tuesday, it was trading 54.30. So, a very, very volatile stock. What I would caution you and anybody else that's listening, the implied vol for this out to next week, November 8th, which of course will encapsulate the election, it's 450% implied volatility. Just for comparison, something like Apple is going to be in your mid 26s. So so implied vol is extremely high. So no matter if you are bullish or bearish on this stock, and what you do not want to do is simply buy a call or buy a put, because no matter which way we move, given the results of the election, implied vol is going to get absolutely hammered, unlike anything that you've probably ever seen before. So if you have a naked, let's say, call or put position out there, you could be right directionally and actually lose money. So the way to get around that is to do there's a lot of ways to get around it, but the most direct and easy and straightforward way is to play it with a vertical spread, because that'll hedge out that a lot of, not all of it, but a lot of that implied volatility. So that's the way that I would play it. I'm, looking at the price action over the last few days, it's clearly bullish. Where can it go? Could it go to 100, 200, 300? Maybe it can. Can it go to 0 as well? It could do that too. So again, taking politics out of it, be careful of and understand the risks that a call is not only bullish or put is not only bearish, but there are other things that go into it, like time and especially in this case, implied volatility.
That big implied volatility means that stock could move really big up or down. Nice to watch that options market for us. Thank you, Mike.
All right, you're very welcome. Thanks for having me.
Go to businessfirstam.com for where to see our show on TV.